Welcome, guys, to Leaders in Lending. Thanks for making the time. Today, I'm joined with Becky Philippi from First Interstate. I got that right? Mm-hmm. And Fabien Thierry from Bank of America, the chair and vice chair of the Auto Finance Committee at the Consumer Bankers Association. Thank you guys for making the time to join the podcast here.
Thank you for having us.
Yes.
So I know you guys recently had your committee meeting. So talk to me about it is like a very interesting time to ask the question, what's top of mind for the committee? Because it's kind of a wild world we're living in. But right now, what's top of mind for the Auto Committee?
It's just such a valuable committee and just a great group of leaders coming together, but really focusing in on kind of the macro trends in the industry. Obviously, regulatory items, fair lending, gap insurance, and then servicing and collection processes. Yeah.
Fees also is another one that regulators have been looking into. Cross banking products, but that obviously made its way to auto. So fees are also like top of mind for the bankers.
So what do people think about it? I mean, that's a lot of top fair lending, gap coverage, fees, regulatory oversight. Has there been an increase in like examination intensity, or what's driving the kind of focus on these regulatory topics?
Actually, I will start by sharing a stat from my institution. We were comparing the level of exams, both combined between internal and the external, and there's an increase of like 80% of activities in the space.
How do you measure that? 80? That's like it's like a precise number. It's not like a back of the envelope.
We obviously track all external and internal exams coming from various regulators and various internal functions. So that was an easy math for us to do, but just to show like cross product I would say just the additional resources needed to cover all those exams. So no wonder why it's number one on everybody's mind.
Right. And rapidly changing. I mean, just...
Yeah. Well, and I saw there's lawsuits from attorneys general and all sorts of stuff coming down. So I imagine it's a real increase in focus on getting things right, because it's it feels like a lot of people out to make sure that the consumers are being properly served in the market. Put it that way.
Yeah.
There's one piece also, Becky, that I think our committee is very interested to be hearing from all of us is what we do in terms of like innovation in the space. So. Lot of disruption, and most likely we'll be covering that a little bit later, but innovation is top of mind for the bankers.
Well, let's talk about innovation, because I know like it's been an interesting couple of years in the just auto buying market, from like lack of inventory to digital buying to just the purchase of an automobile has changed, and a lot of pressure on both OEMs and dealers from experiences like Tesla or Lucid that have full digital end-to-end purchase and finance. I've got my own funny stories about buying both a Tesla and a Jeep, which we can tell because they were pretty different and bizarre experiences both. But what are the key trends you guys are seeing coming up? Because obviously whatever happens in the purchase of an automobile market flows through into the automobile financing market. So what are the trends you see happening in that space? Because it feels like it's a very rapid pace of change right now.
It is, and I will start by just maybe the number one that comes in mind is just the increase related to the online and digital activities that we're seeing coming from the space, and that's really like kicked in gears during COVID. We've seen like that trends accelerating, and clients looking for digital solution to meet that auto finance need, and that just like trickled down to the entire industry, from the lenders to consumers demanding new products to the I will say the dealers also in the industry changing the way they ultimately have like a presence online and having different tools where clients at the time could not be face to face. So that's really kind of like been one trend. Another one that I think has been very transforming in our space is, you're thinking about just the level of like car inventory. So over the years, that really like we were used to have those lots at the dealership full of cars. And we went down to close to nothing. And I think there's lesson learned here for the industry, and manufacturers, OEMs, I think took good notes. Because when you're thinking about just the years of 2020, 2021, if you're looking at the profitability for a lot of manufacturers, we've seen profitability like reaching high scores at a point where you just inventory was very scarce. And so that would be interesting to look in the future to see how we see that trends coming back. Are we going to get back to those, high inventory levels with more discounts like we used to in the past, or are we going to find like more of that balance?
Like you said, they took good notes, and they've learned that they can be pretty effective.
They can be pretty.
You can manage the inventory levels and kind of create that demand.
Yeah, I bought, it wasn't a car, it was another recreational vehicle. So, but I remember I was looking through the invoice. This was during COVID, and I go, there's this fee. It was like $1,000, $2,000. I said, what is this? Well, it's clean. That is a ridiculous fee. And I go, Jeff, it's because we can. Right. Would you like the vehicle or not? Because if not, we can give it to somebody else. And I thought, oh, interesting. This is the market price fee. The market price is above the stated price, and so we're just going to stick it on there. And that was probably pretty good for that dealer and for the OEM ultimately.
Absolutely.
And Jeff, your point here is actually a good one. That's another trend that we're seeing. If you're looking at just the level of pricing on new and used vehicles, I think we've seen those reaching historical high. You could argue that they're still at a very high. At a very high level. We've seen like used price coming down slightly, but that's also another dynamic that we have to deal with at a time where inflation rates are, just if you're thinking about just the APR and the level now could just like inflect the consumption. So this is what comes to mind. And the last one, Becky, if you agree, I think it's around like the newcomers. You mentioned the Tesla and the Lucid, of course, electrification, new EV coming and challenging also just the existing model. And coming back to also the point I was making earlier about like the online buying process, introducing new dynamic in the market and a new client experience where now you could just do everything online.
It's interesting because it feels like the OEMs are using the moment of electrification to change the nature of the relationship with the dealerships in terms of many of them are looking like my experience. I joke about buying a Tesla and buying it. My interesting Jeep experience was that I wanted to buy a Jeep. There was no inventory. I go to the dealer. They're like, you can search the inventory online. I'm like, well, there's nothing. There's like 2 that are here and they're not what I want. And they go, well, we just have to order it for you. And I say, okay. And so I, of course, what did I do first? I went to Jeep's website. I configured the car I wanted, and they put me in touch with the dealer. And I went to the dealer and like, oh, well, you're going to have to order it. I said, okay, how do we do that? And they pull up Jeep.com on an iPad and had me reconfigure what I'd already done at home and then submit it to the manufacturer. And I went, well,
why do I need you?
What did I do? What did I come in here for? What is this whole process? And they, of course, got something a little wrong. And no, you didn't do the way I told you this, And that was like greasy. But it feels like a lot of the manufacturers are trying to use their electric vehicle fleet as a place where going, hey, no, we may take more control of that buying experience because this is not fitting into our old relationship model. And so I'm curious if you see that shifting into more broadly, because it does feel like a moment where they're trying to like a little bit change the way it works and provide that the Tesla experience. You like give me your credit card and then the car shows up at your house. 3 weeks later. It's a very different experience. And when I think that the OEMs are trying to make something like that available for their consumers as well.
Yeah.
Agreed. And so couple of, if you're thinking about just what you're describing, which is really like reinventing or revamping, I should say, the client experience. And this is really kind of like the name of the game. So a lot of the lenders are used to work through the indirect space and the dealer model. Some of the new players that you just mentioned just are reinventing that client experiences, providing digital solution for the clients to configure the vehicles, just linking the loan application and the financing
directly
right in it, and providing like all the digital tools, e-contracting, e-signing that clients will expect, and that process could be done from your couch. So, and I would say that is also a good thing for the industry. That's accelerating that transformation, that digitalization of the space. So overall, I think it's better for the clients, better for the industry, and a lot of the players across the spectrum are just looking into a solution. And I know that Upstart is obviously
we play in that space as well. Beck, let me ask you this, because the technology side on lending particularly is interesting to me. Kind of how do you really integrate to that experience? And let me give you, so I said I wouldn't tell both my car buying stories, but now I'm going to tell both my car buying stories, which is, I went to Tesla and I called my bank And I said, well, I'd like to I'm buying a Tesla. Can I get a loan? Like I've worked with you guys for years. I did the thing that you all would love for consumers to do. I called my bank and I said, I'd like to get a car loan. And they said, I'm sorry, Jeff, we don't have a digital application and I can't do it for you as your banker. But if you walk into the local branch, they can give you the application to fill out. And I won't name my bank and I said, this is ridiculous. I'm not doing that. And I went to the Tesla website. They said, would you like to get one of our financing offers? And I said, yes, I would. Apparently, I thought I was just going to pay cash, but apparently I will finance with you. And I submitted the application. I got instantly approved, and I got a loan from my bank that did not have a digital process for me as a consumer to get a loan, but would give me a loan digitally instantly through Tesla sites. So they got the business in the end, but in the back door. And I'm curious, we've talked about the technology on the car buying process, but the technology of being able to offer instant close, really seamless technology on the lending side. I'm curious what you see happening in that space, because that was really shocking to me that they could provide a digital close experience on a loan on Tesla's website, but not to me directly as a customer. I was kind of going,
right.
What just happened here?
It is surprising how many, especially smaller institutions that you might heur that don't offer that. And
it was not a small institution.
Really?
No,
Wow.
it's not a small institution.
And
I'm narrowing down the list.
If you can't support that channel, you're left in the dust. And then, like you said, to have the back end integration through Tesla, I mean, it's important that we account for that.
So I think what you're touching on here, Jeff, is really like an evolution that is happening in the marketplace, where even the lenders are looking into, historically, I will say just most of the lenders in the auto space have been playing into the indirect space.
Of course.
And what you're describing here is just simply a needed investment, and some players are, I would say ahead of others into the client direct. To your point, proposing financing solution for their own clients. And then that will lead to the dealers, or that will lead to the manufacturer in your case, or example Tesla. And some of those capabilities are getting built. It's a business decision, I would say also, that some of those lenders are making on us.
Well, it's always often, I mean, I'll say everybody wants our customer to come to them for the loan, but then, the dealers have a habit of finding a way to convince you that there's a better option through their indirect channel that you can get, and that loan not sticking. So I understand it can be a tough business decision to make that investment, because you can have a great available product. I might go get pre-approved and you send me the check and I go, you know what? I didn't want that anyway. I actually got a better deal through Tesla. It's a tough decision, because it's not always been easy to keep that business. Even it's hard to get people to come to you in the first place, and it's even harder to get them to stick with that direct loan when they walk in the dealer and they've got some incentive going, or they call their partner over at their local institution and find you a better deal.
It can be disruptive to dealer relationships too. So when you talk about with the business decision, that's part of it as well.
It's a fine balance.
Yeah. So let's talk a little bit about the lending side of the business more directly. I know the inventories have shifted the sales environment, but the interest rates have been a pretty interesting ride here of late. And you combine that with, shifting asset values, and what is the collateral I have really worth? What's the value of my book? What's the real recovery value on my book as those prices go up and maybe don't stay where they are and come down, and how collateralized is my book? I'm curious what you're seeing shifting in the environment, because it feels like both sides, both the interest rates, the cost of funds, and the asset value backing this have been on a bit of a roller coaster ride in terms of where those values are, and how has that impacted the lending business?
Yeah, obviously really impacts the affordability, so borrowers, if they're in a position with negative equity now from like you said, buying high and kind of losing value, that's a risk there too. But, maybe forcing them to hold on to their older units longer and not financing right away, stretching out loan terms, longer loan terms to make that payment more affordable. But some definite risks there.
You're thinking also about, from a portfolio standpoint, the clients made an arbitrage as well. If you're looking back into 2020, 2021, we had a high mix of lease happening in the US market. That really kind of shifting back to more like a purchase, based on what you're describing and the dynamic of the market and the price and the interest rate. That might shift back in the future. We're seeing some inventory coming back, and I would argue that some of the manufacturers might just subsiding a little more of the of those leases. But that's another dynamic that we've seen for the last couple of years, which obviously changed or has an impact on just the overall portfolio. and the way we manage it.
Are you seeing impacts to like credit quality, credit performance as rates go up? As you know, we've seen the personal savings rate, was at a kind of obscenely high level that was almost never seen in history, and now it's like going down below where maybe the long-term average seems to have been, if you accept that kind of 2 years of like that. And you look at that graph and it's like, whoop. It just kind of doesn't even make sense with those 2 years. But it seems like that's coming down. Has that flown through to losses? And of course, with asset values maybe decreasing over time, you've got like recoveries also come down. Have you seen that impacting portfolios generally yet, or is that maybe something you're just keeping your eye on because it's not in the data yet? But it certainly looks like a trend to be watching.
We were so artificially low on delinquency, in the industry for a while, so it's starting to level out a little bit now.
And if you're thinking about just, that's obviously something that we monitor just and
constantly. I imagine,
keep our eyes on. To your point, Becky, I think just the industry has been dealing with very little delinquencies and losses on portfolio based on the previous year's performance.
And great recovery. We got to enjoy that, the higher values too.
So I would say just obviously depending on the lenders and the type of like lending activities, you could argue that portfolio will just behave slightly different. But at that stage, I think the losses or the delinquency still remains like fairly low. Coming back to pre-COVID level. So, but we're watching.
Watching.
Yes.
Wondering, seeing what happens. I wonder, do you see people preparing for? This is thinking farther in the future, but we were partnered with some institutions around a refi business, which has never been a huge business in auto. It's never been compared to, like, let's say mortgage. The percentage of loans that get refinanced is actually quite a bit smaller, which we found odd. And obviously, right now is a really bad time to refinance loans because your cost of funds are likely quite a bit higher than when those loans were originated. But I'm also cognizant that launching new programs takes years, and in years we're likely to be in the opposite environment, which is a bunch of loans that originated during a relatively high interest rate period now. With cost of funds, I'm not supposed to knock on the table because I mess with the mics, but knock on wood, interest rates coming down. I'm not talking about the next 6 months, but the next 2 years, we expect to probably see interest rates coming back down from where they are now. And that means for an opportunity and one that probably, if you want to be ready to execute on in a direct China channel, you got to be investing in, if not today, in the relatively near future. Do you see people looking to the future that says, hey, we've got a very different environment that will be here eventually. We want to be ready to take advantage of opportunities that are created by that very different environment?
I think the short answer is yes. That specific product you're describing is something that I've always been keen on. Being a player in the client direct space, that's actually I'm very active in this and also investing in capabilities ahead of the cycle that you're describing. And it's all about, again, just serving the clients, being there, reinventing that client experience. And if you think about the refinance process in itself, there's a lot of hurdles that comes within refinancing your loan. And so working through those ahead of time, trying to automate and simplify the process is what we're already kind of like focusing on for the next cycle.
It feels like that process is also getting easier with so many of the DMVs moving to electronic titling, particularly during COVID, where there's a lot of maybe not full electronic titling, but e-signatures allowed on title transfer. All of a sudden you're saying, some states that was a temporary and now it's becoming a permanent solution, going, hey, we can actually start to automate what was in many cases a very manual process that made, in my experience, like I can get you into a better rate, but after I cover my operation costs, well, now I can't get you into a better rate anymore because it was so expensive to do some of this manual processing. And that may change the nature of the opportunity in a meaningful way if we can really get to high levels of digitization and automation.
Great.
Interesting. So what are the other big trends you're seeing, like if coming up on the next couple of years?
The one that comes to mind is just, an evolution of the ownership model.
That's a fascinating one.
Thinking about trends that we're seeing in Europe. So obviously, we've seen the traditional ownership model and the introduction of more of the subscription model. And if you're thinking about the technology, we're thinking about EVs, you're thinking about, the enhancement of the technology that comes with auto drive and the mobility aspect. You could think about clients potentially pivoting in the future and looking for another way to own or use a vehicle. So usership or subscription versus owning. And that's something that I think often. Now, will the consumer in the US, there's a couple of players already, just more on the fintech, but just introduced solution in the market, more on the fleet side. But that's an interesting thing for us to watch and see how the consumer demand evolve.
Are you seeing real adoption? I mean, it's fascinating. I was having this debate with my son the other day because he just bought a record player, which is neither here nor there. But I was kind of saying, I remember when streaming music first came, and a music aficionado said, no one will ever use streaming because they want to own the music. They don't want to, I can't not own this. Like, if I stop paying Spotify, I can't listen to the Beatles anymore. Like, that's crazy. I bought it. It's mine. I can listen to it forever. And of course, the reality was that most consumers went, no, this is just much easier. I get access to a huge library. I'm okay paying $10 a month to Spotify or whatever. And awesome. And so that was this moment where you thought people really need to own, and then turned out that they were totally fine subscribing to music instead of owning it, except for my son with his record player, who now has to own physical vinyl records all the time. It's a thing. What's old is new again, right? The retro is in. But it's interesting because it makes me wonder if that, I kind of go, how could you not own your car? But then that's what people were saying about music 10 years ago. Maybe this is a trend that really is going to be coming for us.
And if it's more affordable and they're able to get into a vehicle where they couldn't otherwise.
Yeah. And again, you're talking about autonomous driving as a technology that just still has ways to go before it becomes mainstream. But if that becomes the case, you might see also, just at the end of the day, if you're thinking about the usage of your vehicle, I will say I will argue at a good 60-70% of the time that vehicle is parked either at home or at
way more than that. 90-something% is parked either at home or at work.
Yep. That could totally change also the way, the dynamic of the future again, challenging that ownership model. And another item we'll keep our eyes.
It's a lot of things to keep your eyes on in this space. It seems to be
a lot of interesting trends happening now.
So what is your advice to lenders who are in this fast-moving, rapidly changing space with lots of things to keep your eye on? How do you stay ahead of the curve? How do you keep your eye on the ball, where it's going, and make the right investments? What's your advice?
Have to be flexible because, like you said, it is changing so quickly, and be ready to adapt. And he keeps talking about the things we're watching, and to your point earlier, you have to be forward-looking so you can put things in motion to capture that next cycle. So just really keeping to watch that.
Yeah, I will come back to the concept around the client experience and providing delighting solutions out there. Digitalization of the loan application process, integration with some of the players, for us lender, direct or indirect, or even with the OEMs for that matter. Personalization is another one that I care. As a former marketer, I think it's important to see what also we can make that application or financing process a little more personable. And if you're thinking about just the technology and that digital component, mobile first, automation, trying to apply potential AI to again that lending space. All those are the trends that I think are players in the industry need to look and consider when developing new products and launching new solutions for clients.
Do you have advice on how I think one of the things you said, Becky, that's really interesting is this need to be flexible. And I feel like so often our investments, particularly in technology, end up constraining us in terms of our ability to adapt to what's next. We spend all this time integrating one thing, and then it's not the thing we want. Absolutely. Sometimes by the time it's implemented, I need another thing. Are there strategies or advice you have on how do I build myself, capabilities such that I can respond more rapidly and I'm not stuck in? I think maybe the course is a great example of something that I really have made a huge investment in, and now I'm it's constraining my optionality moving forward. So I'm just curious how you think about best supporting optionality, flexibility in the future when you're making investments now, because it feels like that's the answer you're giving me is you got to be ready for stuff you're not ready for. Right. How do you give yourself an infrastructure to support that kind of flexibility?
Really making sure, I guess, that if you are implementing a solution that it has open integration, capabilities. So if you're putting something in place and then you wind up wanting to join something else in to support the process or, give you some more.
So I have my API, so I have my capabilities. Yeah.
Yep.
think about just from a tech stack. I think the industry, generally speaking, come from a space where, and I will talk about us as banks, where you own your technology, you develop it in-house. Collaboration in the future is most likely, you just mentioned the term API, but also collaboration with various players. Fintechs could be also a solution here, an easy integration, and always coming back again just to, when you build those capabilities, making sure that it's built around the clients, just that it's always simple and it's automated. Taking, we were talking about refinance earlier, just taking all those components out and just making it like a very linear process and easy. And so that plus the collaboration, and not necessarily the need to be owning your own platform, but leverage solutions that are out there, is one way to keep on evolving without the cost and the resource that come with it.
Love it. And I love your point about, this has come up frequently with my guests, about focusing on the client experience. I mean, I think so often we think about the features the bank wants or the capabilities the bank needs, and you get this like checklist of stuff your solution needs to do, and making sure that you're thinking about it from the client's point of view. You go, it does all the things we think we need, and then you open up as a user and you go, oh my God, I would never do that. And you go, well, maybe that's not a good solution, even if it checks all the internal risk management, whatever product boxes. And so that's always a good reminder that, like, ultimately you got to. I mean, customers have Google's favorite saying when I was there was that competition is just a click away. And it's like so true now in the digital world that you really do have to think about that experience, because people, if they don't like it, they will go try somebody else real fast.
Right.
All right. My last question I like to ask people, I'm going to ask you guys this. You've done a little bit of this, but like, what's one good, bold prediction about the future of, we'll just say the auto lending space, but a good, bold prediction for us? Going to make him go first so you can collect your thoughts. I like the strategy.
Got me.
And again, in terms of innovation, where do you want me to go?
Wherever you want to go.
So I will stay with the concept around like being client-centric and launching product and solution that meets that client's need, being an omni-channel. I think if you're thinking about lenders and the various players in the space, looking into the direct, the indirect, the OEMs, and having solutions and capabilities in that space that will allow you to be driving that better client experience overall. I think that's really the challenge. At the same time, at the time where the technology is evolving so fast, so you have to run with those principles in parallel. But I think that's the challenge, but at the same time, the opportunity in front of us.
Yep, and being able to meet the client's needs the way that they want to be met. I mean, because not everyone wants to be interacted with in the same way. So like you said, being forward thinking so that you're able to satisfy needs just depending on, they want to be interacted with.
It's such a great point, because one of the things I've heard a lot that I think rings so true to me is like, when people want to talk to somebody, make it easy. And when they don't want to talk to somebody, make that easy. And sometimes we do both. We say, well, now you got to call somebody to do that. I don't want to call anybody to that. Sometimes you go, well, you can't call anybody about that. And you go, I don't know, I do. And of course, the more you get your people out of the process that somebody can do on a self-service way, the more they're available to be instantly available for the people that actually want that. And I think that's easy to say and hard. Some of the best advice is simple and yet very challenging to actually execute. Well, thank you, Becky, for making the time today. This was great. I appreciate you taking the time and very great insights.
Yeah.
Thank you so much.
Very nice. Thank you.